Welcome to the deep dive. Today, let's forget the confusing charts and the crazy stock market noise for a bit.
Yeah, let's step back.
We're going to try and understand the real story behind a company, what actually makes it work,
Like looking under the hood.
Exactly. And figure out if that story is maybe something you'd want to, well, be a part of, even if you've never thought about investing before.
And the company we're tackling today is one you definitely know.
Oh yeah, Meta platforms. That's Meta on the stock exchange, Facebook, Instagram, the whole lot.
Right, and we're not just looking at today's price. We've got some detailed analyst reports here. Think of them as kind of like expert guides.
Guides to the business itself.
Precisely. We want to understand what really drives Meta, what its future might look like, and maybe get a sense of whether it's a business worth, potentially owning a piece of.
Okay, let's get into it. Meta. It's where, everyone connects, shares pictures, maybe scrolls a bit too much sometimes.
Guilty as charged.
Yeah. But from a business angle, what is Meta, fundamentally? Can you break it down simply?
Okay, so at its core, Meta runs the world's biggest online social scene. Easily.
Biggest, okay.
Yeah, across Facebook, Instagram, Messenger, WhatsApp. They have almost 4 billion people checking in monthly.
4 billion. That's hard to even picture.
It's staggering. Think about it. That's like more than half the people online globally.
Wow. Okay, so how does that work? These apps are free. Where does the money come from? There's got to be a catch, right?
Well, the catch, if you want to call it that, is advertising. That's the engine.
Ads. Of course.
They give us these amazing apps for free, but behind the scenes, they collect anonymized data, what we like, what we click on, our interests, that kind of stuff.
Anonymized, though.
Supposedly, yes. Anonymized and aggregated, and that data lets businesses show us very targeted ads.
So, if I search for hiking boots, I might see ads for hiking boots.
Exactly. Or maybe outdoor gear companies or travel companies offering hiking trips. It's like, imagine a free newspaper. It's free because it's packed with ads tailored to its readers. Our attention, basically, is what Meta sells.
Right, our eyeballs and what catches them.
Hmm.
A giant digital advertising network. Makes sense.
Pretty much.
But what about all the buzz around VR and AI? The Metaverse stuff, where does that fit in?
Good question. So while advertising pays the bills now, Meta's definitely got its eyes on the future.
Playing the long game.
Absolutely. Their Reality Labs division, that's pouring billions into virtual reality, augmented reality, the headsets, the whole metaverse concept.
Right, the futuristic stuff.
And they're also betting big on artificial intelligence. They're even building their own advanced AI like Llama.
Llama.
Yeah, yeah. So ads are the present, but these other things, they could be the next big thing for them. Or not. It's a bet.
Okay, got it. Massive ad business now, potential huge shifts later.
Yeah.
So if we're looking at Meta's strengths, like an analyst would, what are the green flags? What makes it seem strong?
Well, one key concept analysts love is the economic moat.
Economic moat. Like a castle.
Exactly like a castle. Imagine this huge, deep moat, maybe with digital crocodiles.
Huh. Digital crocodiles. I like it.
It's something that protects the company's profits from competitors for a long, long time, a sustainable advantage. And Meta, it has a really wide moat, according to these reports.
Okay, so what are Meta's crocodiles? What builds that moat?
2 main things. First, they're intangible assets. This is huge.
Intangible, like stuff you can't touch.
Right. Primarily, the absolutely massive amount of user data they've gathered over the years, billions of users. It's not just random data. It lets advertisers target specific groups with incredible precision.
Like the hiking boots example.
Exactly. Or a small business targeting only people in their specific town interested in, say, pizza. Plus, their ad technology itself, the algorithms, they're super sophisticated and constantly learning. It's like a secret sauce.
A secret sauce made of data and smart tech. Hard to copy.
Very hard. And the second moat factor, that's the network effect.
I think I know this one. The more people use it, the better it gets for everyone.
You got it. Think about WhatsApp or Messenger. If all your friends and family are on it, you're kind of stuck there, right? Even if a new app pops up.
Yeah, you need everyone to move with you, which never happens.
Exactly. It locks users in and makes it incredibly tough for new social platforms to get started. It's like throwing a party but forgetting to tell anyone the address.
Okay, that makes total sense. Data and everyone being there already. Huge advantages. But the internet changes so fast. How do they stay ahead? New apps pop up all the time.
That's where their size and, frankly, their ruthlessness comes in. They adapt.
How so?
Remember when Snapchat blew up with stories? Instagram didn't wait. They launched their own stories feature.
Oh, yeah. And now everyone uses Instagram stories.
More people, arguably. Same thing happened with Reels, their answer to TikTok, and more recently, Threads, which is clearly aimed at Twitter, or X as it's called now.
So they just copy good ideas.
They leverage their massive user base. They can roll out a copycat feature to billions of people almost overnight. It's like a giant battleship deploying speedboats to head off any threats. Their scale is a weapon.
Okay. Size matters. A lot.
Mm-hmm.
What about the AI investments? How does that help their current business, the ad stuff?
AI is already making a big difference there. The reports mention that as of early 2025, over 4 million advertisers were using Meta's AI tools.
4 million. Wow. What do these tools do?
They help create ads, target them better, optimize campaigns. Basically, they make advertising on Meta platforms more effective for businesses. Better results for advertisers means they're likely to spend more. It's like giving them a super smart assistant.
And that feeds back into Meta's revenue. I think I saw something about their revenue per user going up.
Yeah, that's a really positive sign. Globally, the average ad revenue Meta gets from each user. It went from around $25 back in 2018 to over $40 by the end of 2023.
That's a big jump. What does that tell you?
It shows they have pricing power. Advertisers are willing to pay more, probably because they're getting good returns from advertising on Meta's platforms.
And is this growth just in places like the US, or is it broader?
Analysts see a lot of potential globally, especially in regions like Asia, Africa, the Middle East, places where internet use and incomes are rising. That means more users and more potential ad money down the line.
Okay, sounds pretty strong. Wide moat, adaptable, using AI effectively, growing revenue per user. But it can't all be rosy. What are the risks, the potential problems?
Definitely not all rosy. There are some significant uncertainties. A big one is Reality Labs.
The Metaverse division.
Right. It's losing a lot of money.
Billions.
And honestly, it's still really unclear when or even if that whole consumer metaverse idea will really catch on and make money.
So it's a massive, expensive gamble right now.
A huge gamble. And similarly, their AI chatbot, Llama, it's technically impressive apparently, but there's no obvious way it makes money yet. These are long-term, very expensive bets.
Bets that are currently dragging down profits.
You could say that, yeah. Then there's the whole regulatory thing, especially in the U.S.
Antitrust. Worries about them being too big.
Exactly. There's an ongoing case. The fear is regulators could try to force Meta to break up. Imagine splitting off Instagram or WhatsApp.
Whoa. That would completely change the company, wouldn't it? Weaken that network effect you talked about?
Absolutely. It would be a major blow to their scale advantages. So that's a big cloud hanging over them.
Okay, what else?
Well, they rely on ad spending. If there's a big economic downturn, businesses cut ad budgets. That hurts Meta directly.
Makes sense. Less money flowing in.
And specifically, some reports note that a chunk of their recent growth came from Chinese retailers like Temu and Shein spending heavily on ads.
I see those ads everywhere.
Right. If that spending slows down for whatever reason, maybe regulations, maybe changing strategies, that could also hit Meta's growth rate.
So they're exposed to the broader economy and also to specific big advertisers.
For sure. And putting all this together, the opportunities, but also these big risks like Reality Labs, AI uncertainty, antitrust, the analysts assign Meta a high uncertainty rating.
High uncertainty. That sounds concerning.
It just means there's a wider range of possible outcomes than for some other companies. The massive investments and the regulatory clouds are the main drivers of that uncertainty. It's not necessarily bad, but it's something investors need to be aware of. Oh, and ESG risks too.
ESG, environment, social governance.
Yeah. Things like user data privacy, data security, maybe the impact of social media on mental health. There's always a risk of more regulation around those areas too.
Okay, lots to weigh up. Strengths and weaknesses. Now, the big question for many, the stock price. What do the analysts think it's actually worth?
So the reports give a fair value estimate. It's the analyst's best guess, based on all their research, of what one share of the company is truly worth.
And for Meta?
The main report we're looking at puts that fair value at $770 per share. That estimate was from late January 2025.
$770. Okay, where was the stock price more recently? You mentioned it earlier.
Right. As of early April 2025, it was trading around $505.
So $500 versus an estimated $770 fair value. That's quite a gap.
It is. Based on that comparison, that the analyst views the stock as materially undervalued, significantly cheaper than they think it should be.
Materially undervalued. Okay,
Yeah.
they even calculated a ratio, right? Price to fair value.
Yeah, it was 0.66. Since that's well below 1, it reinforces the idea that the stock might be trading at a discount to its intrinsic value.
And what's the thinking there? Why so undervalued, according to them?
The analyst argues that even if you factor in some potential bad news, like, say, ongoing tariffs hurting global trade, which they estimate might knock 15% off their fair value, the stock still looks undervalued at that $505 price.
Interesting. So even with some pessimism baked in, it looks cheap.
According to this specific analysis, yes.
What about those star ratings? Like Morningstar stars, do they align with this?
They often do. In early April 2025, Meta had a 4-star rating from Morningstar. Generally, 4 or 5 stars suggests the analyst believes the stock is undervalued and likely to provide good returns, considering the risks.
So multiple signals pointing towards potential undervaluation, at least from this analyst perspective.
Yeah.
Okay, one more area. How does Meta handle its money? What's the verdict on their capital allocation?
They seem to be in a really strong financial spot. Huge cash pile, over $49 billion in net cash at the end of 2024. That's cash minus debt.
$49 billion. It's a nice cushion.
Definitely. And historically, they've done well with their money. R&D spending has paid off, and buying Instagram and WhatsApp turned out to be brilliant moves. Absolute game changers.
Yeah, those look like bargains now. Are they giving cash back to shareholders too?
They are. They actually started paying a dividend, a direct cash payment, in early 2024.
Well, that's new for them, relatively speaking,
It is. And they've also been consistently buying back their own shares from the market.
which can help boost the share price over time.
Potentially, yes. It reduces the number of shares out there, so each remaining share represents a slightly bigger piece of the company.
Okay, so investing in growth, paying dividends, buying back shares, sounds pretty good. But the report gave them a standard rating, not exemplary. Why only standard?
The standard rating means it's generally okay, pretty sensible. The slight hesitation from the analyst comes down to the company's share structure.
Share structure.
Yeah, Meta has different classes of shares. Some shares, often held by founders like Mark Zuckerberg, have way more voting power than the shares regular investors buy.
Ah, so not one share, one vote.
Not exactly. This means insiders have disproportionate control over big decisions. The concern is that this could limit the influence of other shareholders on important issues, like maybe data privacy policies or even CEO performance. It concentrates power.
Gotcha. So good financial management overall, but a small flag raised about governance and shareholder rights due to that structure.
That's the gist of it.
Okay. Wow, we've covered a lot of ground here, really dug into Meta. Let's try and boil it down. What are the main things someone should take away if they're trying to understand Meta, maybe as a potential investment?
Okay, the big picture. Meta is, well, dominant in social media. That massive user base gives them a huge competitive advantage, especially in the digital ad market, which is incredibly profitable.
I like the moat.
Exactly. They've also shown they can adapt, fight off competitors, and they're investing heavily in potentially huge future areas like AI. And, at least according to the analysis we discussed, the stock might be undervalued right now.
But, and it's a big but, there are those uncertainties we talked about.
Absolutely crucial to remember. The Reality Lab spending is enormous and risky. The AI payoff isn't guaranteed. And the regulatory threat, especially antitrust, is real and could significantly impact the business.
So it's a mix. A powerful core business facing some potentially disruptive risks and opportunities. And maybe, just maybe, the price doesn't fully reflect the potential upside per this analysis.
That sums it up pretty well. A strong company with question marks about the future direction and valuation appeal, according to some experts. But, this is just information from analysts.
Of course, not investment advice. Everyone needs to do their own thinking, consider their own situation.
Absolutely.
The goal here was just to provide that deeper context, to look beyond the ticker symbol and understand the actual business story.
Right. To help you think about the company itself.
Exactly. And maybe one last thought to leave people with. Something to mull over.
Okay, lay it on us.
Given Meta connects, almost half the planet online, and they're diving deep into AI, what completely unexpected ways might they weave themselves into our lives or create value down the road? Things we aren't even thinking about today.
That's a fascinating question. With that kind of scale and that kind of tech,
Yeah.
Yeah, the possibilities are kind of mind-bending. Definitely something to keep an eye on.